Today is Sunday, August 3rd, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these updates every Sunday and Tuesday, so if you want to follow along, hit that subscribe button and let's get into it. So since Wednesday, my portfolio had a decline of 0.2%, Pershing Square saw a gain of 1.77, and the S&P 500 had a loss of 2.12, which brings us year to date. My portfolio is at a gain of 22.82%, Pershing Square has a gain of 13.64, and the S&P 500 is at a gain of 6.3. If we take a look at the events for this week, you're going to see that there's only going to be one thing, and it's going to be on Thursday with the initial jobless claims. And of course, this definitely doesn't mean that anything unexpected could come up. This is just what's scheduled for this week. So last week, Jerome Powell held his Fed meeting, and not to much surprise, they decided to keep the federal funds rate exactly the same. So there's going to be 3 more meetings for the rest of the year, one in September, one in October, and then the final one in December. If we take a look at the September meeting, you'll see that there's still an 89.8% chance of a rate cut at that meeting. And for the October meeting, if we don't see that quarter basis point cut in September, there's a 43.9% chance that we'll see it in October, with an even higher 51.8% chance of a half a basis point cut. And if we take a look at the final December meeting, there's a 44.2% chance that we'll see a half a basis point cut by then, with a 49.6% chance of a 3/4 basis point cut. So essentially, it appears that we should be at least seeing 2 rate cuts by the December meeting, with the possibility of a third, but Jerome Powell's made it pretty clear that he's only looking at 2 this year. So their next meeting is going to be that September meeting, which is going to fall on Wednesday, September 17th. So hopefully we see a rate cut at that meeting, because the markets will certainly like that. And if we don't, the markets could certainly take a knee-jerk reaction to the downside. But ultimately, by the end of the year, we should see 2 rate cuts at the final 3 meetings. If we take a look at the SPY chart, you'll see that since my last update, we've definitely fallen off of the all-time highs. And where the SPY price closed out on Friday is actually below this support level. I talked about it in my previous update, but that's what I was looking for in order for me to go ahead and invest some of the cash that I have sitting on the sidelines. So I'm going to have buy orders set for Monday morning to increase all of my positions in my portfolio by 10%. And that'll get my current cash on hand, which right now is around 30%, down to 20%. And if the SPY price does reach this secondary support level, I do intend to get my cash position all the way down to about 10%. And if we swap out the support levels with the 5 and the 15-day moving average, you'll see that the 5-day moving average is just slightly above the 15, but you'll see that the SPY price has already fallen below the 15. And you'll see that the last time that the SPY price actually significantly closed below the 5 and the 15-day moving average was when the downtrend started back in February. There was definitely a lot of doubts in the economy as this downturn was happening, and I think the things that caused that the most are already behind us. So you always got to at least be a little bit prepared for a dip, but I don't think that it's going to be as bad as it was last February. So on Monday morning, when I get my cash position from 30% down to 20%, it would still be another 2.08% decline for me to get it from 20 down to 10. And that would happen if the SPY price did reach that secondary support level. And even from there, if the markets did fall farther, I would still have 10% of my portfolio sitting in cash. And at that point, there would definitely be a handful of positions that would be at pretty attractive buy levels. But I really don't think that the market's going to fall that far. But this is why it's always good to at least have some cash sitting on the sidelines. These are going to be all 14 of my current positions. Right now, Nvidia, Microsoft, Meta, Palantir, and Welltower make up my top 5. And those make up 34.27% of my portfolio. So right now, I have 70.46% of my portfolio invested, which leaves me with 29.54 sitting in cash. And after the buy orders on Monday morning go through, that'll drop down to about 20%. So I mentioned it in my last update, but I am going to keep my eyes out for potentially 2 new positions in my portfolio. And right now, having 14 positions in my portfolio is about the max that I would like to have. So if I do at least find 1 new position, potentially 2, I would swap those out for either Walmart or Costco. But I very well might just keep everything exactly the same and just increase all of my current ones by the 10%. That's going to do it for today. I do make these updates every Sunday and Tuesday. So if you want to follow along, hit that subscribe button and I'll catch you on Tuesday.